aviation sector is buckling under a sharp increase in demand for air travel despite staff shortages. The previous dismissal of a large portion of this sector's workforce under COVID has now seemingly backfired, and businesses operating in this space are scrambling to recoup losses. As a part of this, many airline companies have cut their trips from schedules. There are around 1,140 flight cancellations in the week of the 28th of March to the 3rd of April, up from just 197 in the same period in 2019. Several airlines in the UK have already warned consumers of potential flight cancellations following a decision to reduce operations until the end of May. Plus, with the absence of manpower at airports, travelers are burdened with the extra wait times for security, customs, and check-in points. Meanwhile, some airlines are going to extremes to cope with the staff shortages. The multinational low-cost flyer EasyJet has recently announced that it'll be removing seats from its planes so that they can fly with just 3 employees instead of 4 or more. This will limit the number of passengers per flight to just 150. And similarly, British Airways has cut down its operations by 10%. Between March and October, after it decided to slash around 10,000 jobs when it faced travel restrictions during the pandemic. JetBlue Airways as well has reduced its flights for summer by between 8 and 10%. So in the midst of all this, let's have a look at 3 FTSE-listed airline stocks that are impacted by these staff shortages. First of all, International Consolidated Airlines. The company recently reported that passenger capacity in the first quarter was 65% of 2019 capacity, up from 58% in the fourth quarter. Its operating loss for the first quarter stood at £731 million, down from a loss of £1 billion in the previous year. With a market cap of £6.5 billion, IAG's shares have devalued by 38% over the past year, while its year-to-date return stands at negative 7.75%. Next is EasyJet. The group reported that passenger capacity in the second quarter was 80% of 2019's figures. EasyJet expects to report the loss before tax in the range of £535 to £565 million. With a market cap of £3.8 billion, the company's share value has devalued by 53% over the past year. Meanwhile, its year-to-date return stands at negative 8.20%. And WIZZ Air Holdings. The company expects a reported net loss in the range of £652 to £632 million in financial year 2021, and for the fourth quarter it expects to be in the range of £210 to £190 million. With a market cap of around £3 billion, WIZZ Air's share has devalued by 41% over the past year, and its year-to-date return stands at negative 29.97%. Now that you're up to speed, give us a sub and hit that bell icon to stay ahead of the game. I'm Holly Shields for kalkinemedia.